It's Carol Roth for Goldline here with a quick recap of 2023 and what is ahead. Well, it has been a wild ride this year, starting with a bank crisis. Remember that one? Silicon Valley Bank, Signature, First National, all of that stuff. Well, fortunately, Fed policy stopped a bank run contagion, and maybe not so fortunately also bailed out the financial institutions. Also, commercial real estate hasn't brought anyone down yet, so while we are not out of the woods, at least we have some stability. Now, speaking of stability, that was not the case very much for the bond market, which followed in 2022's footsteps with another very bad year. We have seen yields come down a little bit, but still the cost of capital remains high. And if you are a long-term bondholder, a holder of floating rate debt, or maybe somebody looking for new capital like mortgage, well, you are feeling the blowback of higher capital costs. And speaking of higher capital costs, the US's financial position, with about $2 trillion in terms of a deficit last year adjusted, and more than 120% overall GDP, really fooled nobody. And the US's credit rating received downgrades from both Fitch and from Moody's. Now, on the consumer front, the consumer did keep spending, but is really hurting their own individual balance sheets in the meantime. We see consumers dipping into their savings and racking up debt, sometimes even taking on multiple jobs to keep up with the increased cost of living. So we want to keep an eye on that. And unfortunately, with the terrorist invasion of Israel leading to a formal war, as well as ongoing conflicts in Ukraine and other areas sort of teetering on the brink, the peace dividend that we had been enjoying for many years really does look like it's near the end of its run. Now, while bonds were obviously under a lot of pressure this past year, gold and stocks both performed really well in 2023. On the gold front, a year ago, gold was in about the low 1800 range. Now we've seen it's recently hit all-time highs. We have lots of analysts and experts who are predicting an upward march for gold next year, although, as you know, nothing is guaranteed. And I personally see gold as a hedge for the long term and think you should be buying it no matter what happens in these long-term ups and downs. As for next year as a whole, I would expect volatility to continue. Obviously, geopolitics is a wild card. There is no sign of the government stopping their spending. We have a presidential election, and maybe we get more clarity on whether the Fed gets a soft landing, a hard landing, or perhaps no landing at all. As always, that is a ton to take in, but what you can do is make sure that you have checked in with your financial advisors and that you have created hedges for your portfolio. Now, given the economic backdrop, adding gold to your portfolio can be both a good hedge as well as a wise strategic move. Physical precious metals, including gold, have been looked to as a hedge for years, including in 2023, by individuals, investors, and central banks around the world who loaded up on gold again this past year. Now, if you have not hedged your portfolio enough, or maybe you are considering adding precious metals to your mix for the first time, please give my friends at Goldline a call to help you. That's 800-319-9533. Have a happy, healthy, and prosperous new year, and we'll see you very soon.
The views and opinions expressed in this video are those of Carol Roth and do not necessarily reflect the views or positions of Goldline or its parent company or affiliates. These views and opinions may have been previously disseminated in other media.